All right, good evening, everyone. It's good to have you again on this channel. This is Market Formula, and on Market Formula, what I do is to break down the numbers, I break down the chart, look at the technical analysis of Nigerian stock market. So that's how I know to trade, and that is my own way of making money in the Nigerian stock market. And if you want to join me, you can follow us and comment, like the video. Let it also let the algorithm show it to many more people that might be interested in this kind of content. And if you want to be the first to be notified every time I release a new video, all right, so hit that subscribe button and let's grow this community together. So in today's video, we'll be looking at risk management. But before we go into what we have for today, let's look at the market, what the market did last week, and see what the possibilities are this new week. And mind you, this week ends the month. Okay, it ends the month of September and we are entering into the month of October. Then we need to look at the market critically and know how the market close, because how the market close for a particular month will signal how it will open or how it will perform the following month. That is just the way price is. We trade the market forward, but we understand where it's going looking backward. So for us to know where price will go for the month of October, we need to look at how price performed in the month of September. The month of September is a leading indicator for the month of October. Whatever happened, the chart pattern we are seeing on the in the market, the support, the resistance, the overbought, oversold, the volatility, all these things put together will make the for the month of September, will give us a clue to certain percentage, to certain accuracy, because we are actually trading a probability, and the chart is our own edge of the market. All right, so that is the way we roll on this channel. So if you like to follow us, I'll also leave a comment. I will leave a link in the description where you can join our WhatsApp community. It's free. Join and let us move together, because I also drop some insight on the group. All right, let's start by looking at the whole share index. Whole share index has already closed for the week. All right, we need to know the projection for the following week. The close for current week is a signal for the following week. So let me now open the all share index. So from the all share index, we can all see that the market is still bullish, although we have a pullback and it's a value swing. So when we have a value swing like that, the way price used to behave, because we call it is a price behavior and we call it price action. Price, anywhere it's going, it used to tell us a story. It will leave a clue of where it's going. But how do we know where it's going? We look at where it's coming from, how it's coming, and how it has been performing in the past. It will give us a signal of what is about to happen in the future. And for us to trade this week, I can see that we have a value swing also at a level here. That's 137. So let me put a line there at 137. That's actually a value swing point. Okay, so 138 here, right? Okay, then we also have another value swing here. So when we have a value swing above and we have a value swing below, what is market telling us to do? That is now in a range, in a defined range. We call it a valid range. It doesn't mean that market cannot break out of that range. It can either break up or break low, but it's now a defined range now. But the market, is it trending, or is it bullish or bearish? The market is bullish. Okay, is it a trend continuation or what? Yes, we want to have a trend continuation now, but we have a valid resistance above. So the market will first test that resistance. It will go to that price and touch it and see whether the sellers there, they have enough strength, because this thing is actually the battle between the buyers and the sellers. So if it will go and test it and see, okay, do you have enough sellers here that wants to send price back? If you test it the first time and you see that The sellers here that know much, test it, the second, it can just break it. So when it breaks it down, we now say, okay, it's a bullish continuation. And until then, we allow the market to do what it wants to do. But the last week candle that was formed is actually a rejection of lower price. If you understand the way price action work, we are seeing a bullish candle, but it's a rejection of lower price because the candle has wick below. We have a wick below here. So it's telling you that price came down and the buyers rejected it. It's telling us, one, the buyers are strong. But are they stronger than the bears? Yes, they are stronger than the bears. But do they have enough strength for a breakout? The market did not break out of the previous week candle. If you look at it very well, the high of previous week, what's the high of the previous week? Is 142,342. So what is the high of last week? 142,276. So 142,300 and something is higher than 142,206. 76. So the market did not break out of last week. So it means that the bias is not that strong. If they are strong enough, they should break the previous week candle. So this week is going to determine whether it's going to break out, because this week it has to break out. If it doesn't break out, then the buyers are still not strong enough. It's weak. I want a breakout. I want this week candle, even if it's not going to close above, it should break out. That means it should have a higher high. If you look at it very well, you see that there is momentum. How do I know that there is momentum? Because the candle here, this last week candle, closes above the close of last week candle, upper week candle rather. So it has a higher close, but did not have a higher high. Market has a higher close, but did not have a higher high. Higher high is volatility, higher close is momentum. So that is what we are seeing in the market now. Is there any other thing that we need to look at? Next week, by God's grace, what we'll be looking at is that we will have to look at the monthly chart, because by next week Sunday, the month of October will have closed. I don't want to just assume that it's going to close bullish. We already know that this thing is most likely going to close bullish. Okay, but I don't want to assume, because as a trader we react. We don't predict. So I don't want to predict. Let's wait for the weekly to close and let's wait for the monthly to close before we project further. I think I've said enough on that particular index. So let's look at a stock that I want to give out today. I believe in that stock because it's actually a pattern that I like to trade. I have learned by experience that there are some pattern, especially when it's a pullback pattern. I like buying low, selling high. Some people prefer to buy high, sell higher, which is called momentum trading. But me, I like retracement trading. I want price to pull back to a certain level, then I will enter, because that's where I get the best risk reward. Because as a trader, I understand risk. If you can master risk, there is no market you cannot trade. There is no market that you'll be afraid of if you master risk. That's why I said today I'll bring someone that I know that is going to do justice to that topic, that is going to teach us on risk management. But now, due to circumstances that is beyond control now, is not able to make it to this meeting, but I will share part of his slide so that you can see some of the things that he has already prepared for us. So I'll be giving out Suno assurance. Why Suno? Because the risk is actually very low. So let's look at it together. So for Suno, I like number one strategy that I like when Bollinger Band squeezes. When Bollinger Band squeeze is telling you that there is volatility close by. Anytime you see Bollinger Band squeeze, is an indication that volatility is close by. You don't need to know what is responsible. As a fundamental trader or as a fundamental analyst, their job is to know. They will now tell you, oh, it's something, they acquired something, they took a loan, they expanded business. That is after the fact. I don't want to trade after the fact. Me, I want to be in the market and let the fact meet me there. So when I see Bollinger Band squeeze, I love it a lot. You can see it when it happened here, when we have a Bollinger Band squeeze here. So it now depends on how squeeze or how close the Bollinger Band is, because the force that is using to squeeze out price, it will determine how it will explode. So when there is a breakout, when Bollinger Band squeeze, you will see that price will start moving in one direction or we move very fast. So when you see a Bollinger Band squeeze, you should know that volatility is around the corner. So on this chart, I already seen that there is volatility around the corner. How do I know there is squeeze? So let me bring out this tool so that it can help us to know that there is squeeze. See, look at here now. What happened to Bollinger Band here? It opened up. When Bollinger Band opened up like that, you can't get too much volatility. Price will be moving up, down, up, down, up, down until we start consolidating in a squeeze. So what happened to this place? We see that this is a squeeze. This is bigger than this. So now it's like a pipe that is passing water. So immediately you press the pipe together, what happened to the water that is coming out? It will start forcing itself out. You now force itself out. So we expect volatility in this market very not too long from now. So that's what I expect. And you see that even on Friday, this stock actually gained 7.82%. If you want to know why it gained, just hack ChatGPT and tell this stock gained this, what could be responsible? It will bring out the possibility what can be responsible. We live in a better, or do I say a more easier world now, that where you can just quickly Google things or you just ask an AI and it will bring out what you want in a minute. So we are living in an information age. So we need to also learn to leverage on that. These days, I hardly even browse anything. I will just ask, okay, help me browse. I can just say, help me browse the internet and give me information on this and this. You bring me all the sites. I'll check the one that I want. And in little or few minutes, I've already gotten what I need in the market. So let me go back to what I'm expecting. So the candle that broke out of the Bollinger Band, let me clear this thing. All right, the candle that broke out of the Bollinger Band is actually here, which is August, the beginning of August. This is the candle. So for this candle, what happened to the price? Price was contained in the body. So for price to be contained in the body, we need a bullish continuation, which is going to be our second signal. The first signal is that it broke out, but it did not have a higher close. So that higher close is what we are waiting for. When we get a higher close like this, like 80%, 85, 90% that this thing is going to open up. So what is going to happen is that the chart is going to open up like this. Bollinger Band, this one open up, this one go up. Immediately that happens, we are in for another volatile market. So we can now ride it. So where are we going to ride it? We are riding it back into this zone of liquidity, because there are actually a liquidity trap here. If you have attended my training, you will know what I mean when I say liquidity trap. There's a trap there. Always remember that anytime price drop like this, some people bought. I'm very sure some people bought this stock at 11 naira 55 kobo. If they didn't buy it, that stock will not come down. They bought it. Some people bought it because some people sold it to them. So they may still be in the market, hoping that one day the price will come back to their entry so that they can break even and come out. So as price is coming up, what do you think they will do? The first thing is that they will protect their capital. So they will sell their stock. And we will look at it in money management today. By God's grace, they will sell their stock. So that is what is happening. So when you are buying here, I'm also targeting here because there will be liquidity supply. There will be supply here. People that bought here that are losing money will sell. Me that bought here that make money, I will sell. So that will contribute to that volume that can now either push price to break out above or send price back. So if the same buys back, it's coming back to the next support. So bounce off support, hit resistance, bounce off support until there is something, or we call it momentum in the market, maybe news or anything that will happen that will now cause that force, that momentum to be able to break either the resistance or break either the support. So let's go to the business of today. So today we are going to be looking at today we are going to be looking at money management, and I will just share the slide I have here. Okay. I won't follow everything. I'll just introduce it. Then I'll just say some of the strategy that I've come up with. So the number one money management secret that separate winning traders from the rest. You already know that if you are familiar with the phrase that 90% of traders they lose their money in the forex world. Yes, there are a lot of things responsible for that, but I don't want to go into it because in the forex market, the only people that has enough or power to move price, they are actually not many. We have the big banks, we have the central bank, we have those are the people that can that has enough volume to actually move price up or down. And when every trader, retail traders, when all of them are long, then they will be the one to come to the market and supply. So when they supply, price come down. So you don't, as a trader in the forex market, you don't want to be on the side of the majority because price will always go against the majority. That is how it is designed. So that is why this rule will always hold true because you don't have access to the order book. Unlike the forex and the stock market, where you have the order book, you can see where the orders are coming from. You can see where people are placing or traders are placing their trade and so on and so forth. So that is it. So let's look at money management. I'm going to explain it. It's about, in fact, money management starts from you. Who you are will determine the kind of money management strategies that you should put in place. Number one, if you are very conservative, then know your risk tolerance, know your threshold. There are traders that will be losing 1 million naira, but they are not shaking. But if you are a trader that with 5,000 naira, you are already off your feet, you are shaking, you should know that I should not press this accelerator more than 5,000 naira. It's like giving you a Ferrari to drive. There's no way if you give a conservative driver a Ferrari, he will still be doing 60, 60, 70 kilometers per hour. When the Ferrari has the ability, is a racing car, and he has the ability to do maybe 300, 400 is what's it called now? Kilometers per hour. If you know the actual speed of a Ferrari, just let me know, please. Just put it down for me. I think maybe 350. I can't remember now. So if you know it, just put it in the comments here. I want to see it so that I will know that I'm on track. So the person cannot go beyond that because their mind cannot carry it. If you and we grow in risk, we grow in it. You cannot stay. You don't start driving by driving with speed. Everybody that learns to drive will start driving slowly. So when you come to the market and you are new, just take it slowly. Know your risk tolerance. Know how much you can willingly risk that will not affect you, that will not make you emotional, because anytime you are making emotional decision, I can tell you, you will always get it wrong, because emotional will cloud your logical reasoning. By the time you are in a loss now and you won't be able to think straight, so you will start making some trade mistakes that someone said that if you record yourself, trading and you watch it, just learn to record yourself trading and go and watch it again. You will be asking, what was I thinking? Why did I buy here? Why did I sell here? You will be asking yourself, because at the spot of the moment when you are looking at the chart, a lot of things will be going on your mind because it's money, it's emotion that is attached to it. So for money management to really work, just define your own risk tolerance. So when you are able to define that, then what is next that you need to know? You now need to apply it to trading. So how do you apply it to trading? I have a tool here. Let me just bring up the Excel now so that I will use it to explain. So this is like my risk tool. So the way it works is, risk is always defined in percentages. When you look at the chart, let me bring out Sono now. Let me just bring out Sono so that we can see what I'm trying to explain. So on this Sono trade now, if I'm really going to trade this market, if I'm going to trade it, my risk should be, I should be able to reach the market, reach this stock. Let's say I took my entry from there. I should be able to reach it to somewhere around here. That is just it. I should give it a little buffer below this candle, which is my most important candle that I'm trying to protect the opening. The opening must be protected. Candle must not close below it, because as soon as that happens and price close below it, it tells me that there is a sell signal. There's a sell signal. All right, so I don't want that. Let's say, to be conservative, I'll first take my profit target at that level, which is at, let me check that price now. The price is 8 naira 20 kobo. So if my target is 8 naira 20 kobo and my risk is that price must not close below, let's say, 4 naira 80. Let me put lines there so that I can quickly see the prices. That's one. That's my entry. That is my loss. That's how much I can take. Then here, so price is currently at 5 naira 80 kobo, and my risk is I don't want a close below 4 naira 85. Let's say 4 naira 85 now. And my target, let's say my target is now, I'm targeting 8 naira 20. So let's go to that chart now. I will now define my risk. So what is my risk? Let's look at the risk in terms of money, because it's money that we know. If I'm saying percentage now, you now want to start calculating, okay, what percentage of this? So don't worry, this Excel tool has already done that for us. So what we do is, what is your risk tolerance? How much do you think you can afford to risk on this particular Sono trade? If my risk tolerance is just, I don't want to lose anything more than 10,000 naira, just put 10,000 naira there, then go back and see what is the risk here. This is 16.34. Let's just say 16 points, or let's say 17%. My risk is 17%. Just come back here and put 17% here. So this is 17%. So we now need to know what is the price. What is the current price that you are entering at? So my entry price is 5 naira 80. So if my entry price is 5 naira 80, just put 5 naira 80 here. 5 naira 80 kobo. So what do? Just press enter. So what the tool will do for us is that it will calculate your maximum investment. What is the maximum that you should put in this particular trade stock? That is 58,823. So what I will do, instead of I will just say, okay, just write it down. My maximum risk is what? 10,000 naira. And my maximum investment that will not make my risk, that I won't lose more than this 10,000 naira, is 58,000, let's say 59,000. So that means the stock that I want to buy is going to be 59,000 unit, 59,000 naira worth of Sono. So, but here, what this does is that, what number of units are you supposed to buy? So if I just go to my chart now, I just buy 10,141 units of Sono at this price. That's my risk. Just leave it. So when you now leave it, when you lose 17%, when the trade loses 17%, what you will lose is just 10,000 naira. It won't be more than that. So at that level, you can now say, okay, this is the maximum I can take. You take your loss and look for opportunity elsewhere. But let me tell you one thing about risk management. You don't expect every trade You don't know the outcome of every trade, but you know the outcome of your portfolio at the end of maybe the month or the quarter, or as you want to be tracking it. So what you should do as a trader is, you don't judge yourself based on one single trade. All right, judge yourself based on your performance, your portfolio performance. Because the way it works is that when you make money here, you can make money here, another stock can lose some money, another will give you the return. So by the time you had everything together, you should always be in the profit. It is Adam School that says that he doesn't know the outcome of the next trade, he doesn't know the outcome of the next 5 trade, he doesn't know the outcome of the next 10 trade, but he knows that the outcome of 100 trades will always be in a profit. It will always be, if your strategy is right. So as a trader, don't be too emotionally attached to one trade, because the outcome of a single trade is actually random. So focus majorly on the performance of your portfolio. So what is my target? And it's also very good that's so that you can set your target also, maybe 10% monthly or 10% every 3 months. That's my target. Then start working towards it. So you continue to align and make sure that you hit your target. And another way that we can do risk management is that we can use the volatility. So if time will permit me, let me see if time will permit me, let me just quickly do the volatility. So another indicator that I teach for money management is actually ATR, average true range, which is also very, very good. It's like the speed of the instrument you are trading, or the stock in this case, is the speed, average true range. So you now need to understand yourself. I want to drive Sono Insurance now. And the speed, what is the speed? You need to calculate what is the speed of this particular stock based on your what is it called? You are a trader. So, and as a trader, we have different, like 4 different types of trader. We have scalper, we have swing trader, we have day trader, we have swing trader, and we have position trader. So if you are like, let's say you are a swing trader, if you want to swing the market, you should be ready to wait in the market for like 3 months. So if I buy this stock now, I'm not thinking to sell tomorrow. Although the market can surprise, this price can jump up, but I'm thinking in the next 3 months, before the end of the year, let's see what this stock will deliver. So that is my horizon, and that is my trade uh length. So let's now go to the 3 months. So what you will now do as a trader is now go and look at the volatility of this particular stock on 3 months. So what is the volatility? Is 1 naira 55 kobo. So if the volatility of this particular stock now is 1 naira on 3 months, is 1 naira 55 kobo. Or let me check it on the monthly so that we can 1 naira 48 kobo. So bring out the calculator. I need to know the risk that is involved. That's okay. If I stay in this stock for the next 3 months, what is the maximum risk I'm carrying? So the maximum risk you are carrying is from the entry, from the opening. I like to do it from the opening, which is 5 naira 50. So 5 naira 50, what is the volatility? That's the speed. That means this particular stock is moving 1 naira 48 kobo every month. That's the average volatility. That's the average random movement. So it can move up, it can move down, it can move up, move down. It's like looking at the market. The stock market in Nigeria is allowed to gain 10% or lose 10% in a day. So the volatility of the stock that we are trading in the Nigerian stock market on a daily basis is 10%. That means it can move 10% up or move 10% down. That's the volatility. That's how far it can go in a month. So in a day. So on a monthly basis, on an average, this is also telling me that how far it can go is just 1 naira 48 kobo. So bring the 1 naira 48, that's 148, divided by what is the opening price of let me look at the opening price for the month, which is 5 naira 55. So divide by 555. So whatever I get, this is it, times 100, because we are looking at percentage. So it's moving 26% 26.6%. So on a monthly basis, I expect this thing to move like 26%. So let's say he did the maximum this month, 26%. Next month, he did maximum 26%. Third month, he did the maximum again, 26%. That's like 75%. Am I able to get 75% on this trade? Okay, this trade is giving me like a 43% return, which is also not bad. Compare looking at the risks that is involved in it. So that is how far we can go. So until next week when we meet again, I'm signing up here. I say I wish you all a very lovely trading week.